angle, no time to delay. Markets rise and markets fall. Atomcash is ready to answer the call, while the bulls charge hard and the bears dig deep. The angle will keep you on your feet. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows, where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating financial podcast in the entire world. You're watching the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Adam Cash, and I'm bringing you the firepower your financial life may have been missing. Now, whether you're new to trading or a trading savant, I am to turn complexity into clarity with a shot of adrenaline. And today is a very, very interesting day. It's the end of the quarter. Yes, end of Q3 is today. It's the end of the month. It's the end of September. And we're heading into October. And it's not without some busyness. Now, if you're here for yesterday's stream, we talked about everything that's going on in the market this week. But let's highlight and remember, and at least for some of you that weren't here, remind you what to keep an eye on for the day. So right now you do have one Fed speaker. You have Collins speaking right now, or currently speaking, started at 9. And then most importantly, we have jolts at 10 o'clock, which will more than likely jolt the market. Where's my cricket? There's my cricket noise. Good joke. And you also have consumer confidence at 10 o'clock. So at that 10 o'clock time frame, we're going to have probably some volatility in the market. We also have Trump today twice. He's making an announcement at 11. We'll see what that is. And then also signing some executive orders at 3 o'clock today. So we got a few little news catalysts going on in the market today. Some extra baked in potential volatility for the market after what was an interesting day yesterday. So let's go to the 5-minute chart here. Let's look at yesterday and do a quick little rewind of what we saw yesterday. Opened up around the 664.55 LOI while I was live basically the entire time. We didn't really go much of anywhere. And then eventually the bears broke it to the downside, but basically playing level to level. Then consolidated around this other LOI down here at 663.05. So really just not much of a kind of a nothing burger day. Yes, we did have a little bit of bearishness, but really not too much. This little sell-off here towards the end of the day was probably the most action I saw all day. If you were watching it live, like that was about it. But outside of that, and then you had a nice little rip into the end of the day. Pretty muted day yesterday, all things considered. Heading into today, we gapped down on the open, and again, seeming like a very muted morning thus far, not really going too much of anywhere. Got a little bit of a pump here in the pre-market going into open right now, and it looks like this LOI from yesterday that was relevant yesterday is going to be relevant today. This 663.05, looking like we're going to sit probably around this level today. There's a lot of volume down here in general. You can even see with my POC here, the green dotted line here, including after hours price action and yesterday's intraday price action. And then you can see if we look at just the pre-market today, or if we include after hours, it was something here where it was floating around this general area here, where it's not really happening. There we go. So most of the pre-market after hours action, finding a lot of volume around that same LOI here. So gonna have to watch that area and a little bit higher here, 66335 as area in 37, I guess, as areas of interest into the open here, where I wouldn't necessarily be too bullish out of the gate unless we break over that. You also have the 200 MA, the dark blue line on my chart here, on the 5-minute coming down on the open so far. So we'll see how that looks as we get into open. Good morning to everyone in the chat. Toby dropping the "you're." Good morning, Toby. You're right back at you. And Negan with the good morning. Good morning, my friend. Thanks for stopping by, guys. Looking at the rest of the market today, we're seeing basically we're all leaning the same way. If anything, the Qs are a little bit more bullish than IWM, which you guys know those are the 3 markets I personally track: SPY, Qs, and IWM. Looking like tech is going to be a little bit more bullish into the day so far, and looking like, although we're basically moving directionally the same. So if we look at all of our charts here on the pre-market, our SPY, our Qs, and IWM, pretty much the movement, so the candle movement is about the same, but the IWM right now is seeing a little bit more red than its peers, which is interesting because, as I explained yesterday, with the end of the quarter, you see a lot of money shuffle around. It wouldn't shock me to see some money go into some like squeezy names today. Some very like retail favorites, especially if there's a gamma ramp ability there for some hedge fund managers to make some money and then rotate that money back out and throw it back into some large cap tech at the end of the day. I will tell you this. If I was a betting man and you go into the end of the day, even though we've had, or we're shaping up to have 5 monthly candles, green candles in a row. Look at this monthly chart. 1, 2, 3, 4, 5. 5 big green monthly candles in a row. Obviously, unless something horrible happens, we're not losing 30 points today. So this is going to be a green monthly candle close. And even on the week here, still floating near the highs. I'm a betting man into the end of the day today, really the last hour, you're more than likely going to see a period of higher volatility and higher volume. What does that mean for you? Either be careful, tighten stops, just risk off a little bit. But if you are going to take a stab at a trade on the market, and you are the type of person who wants to take a risky, high reward, high risk stab with light size, that's the key word, light size, taking a stab, in my opinion, obviously technicals will change things, but long on the market at the end of the day, especially towards the end of a quarter, which is today, that is where I would take a stab and close it out as a day trade though. So not like a swing overnight, but if you are going to take a stab, especially if the market sees a sharp decline, going long and riding it to the end of the day, we're probably going to see some level of, again, window dressing, making the market look really pretty. Market goes up on that kind of idea, right? That theory. And if you don't know what I'm talking about, look it up on Investopedia. So if you wanted to consider a risky-ish trade, regardless of technicals, but obviously if the technicals are in your favor, even better, I would lean more bullish into the end of the day, like at the end of the day, I should say, if you want to take a riskier trade. That's just an idea. You do with that what you will. Now, I will say, for your longer-term equity, what you may want to consider today, because it is the end of the quarter, and this is what I'm personally doing and have been doing the last few weeks, I've been tightening my stops more and more and more and more. Now, I'm still leaving enough room to breathe, especially in positions I'm already green on, because I'm just basically playing with earned money. And if you watched my show from last week, I will upload the segment on hedging as a YouTube video. There is a certain way that you can position yourself in this environment where you're still riding the bull edge of things, but you have that bear protection where you win both ways. And that's kind of how I've been playing it and will continue to play the market as it pertains to my longer term equity, where I'm tightening up my stops, but not too tight where I'm choking it out and like I'm going to get stopped out just like that, but enough where it has a little breathing room on those trades that still have some very good risk to reward. So just be mindful of that. Strange Maker, good morning to you, my friend. Thanks for stopping by. And guys, if you haven't already, I ask you twice every show. I'm going to ask you once right now. Do me a favor, interact with the stream. I got some very nice people in the chat saying good morning, but if you haven't already, say hi in the chat. Drop a like on the stream wherever you're watching, especially on YouTube. If we can get this stream up to 10 likes, nothing's going to happen, but I would appreciate it. But if you're on X, Instagram, wherever you are, do me a favor and interact with the stream somehow. That's all I ask for this program. A little bit of help in the algorithm. My ego doesn't really need it, but the algorithm does. And I actually like when you guys talk to me. So if you're, my preferred method of interaction is you guys typing in the chat. But if you don't want to do that, you're busy at work, whatever, quick like on the stream, follow me, whatever. Those little things do help very much so. So if you do enjoy the program, do me a favor and interact with the stream in any way that you see fit. And don't forget, if you're new here, once this channel, my YouTube channel specifically, gets up to 500 subscribers, this will be an everyday show. So if you enjoy the show, you love the content here, do me a favor, just hit the subscribe button on YouTube. Again, once we hit 500, this will be an everyday show. Thank you guys in advance for your support of this show. Now we got some good mornings rolling in. Hatchet, good morning, my friend. BC Beezer? Good morning. And Eddie gotten beat to the punch today. Eddie's normally our resident yer, but Toby beat him to the punch with the yer, so that's unfortunate. Not as always, but I'm telling you guys, I'm going to be the first financial streamer that's going to be sponsored by Polar Seltzer. I'm not sponsored, but they make good fucking seltzer. That's going to be my first sponsorship. I don't even want money. I just want them to send me a case of like their weirdest flavors to try on stream. I think it'll be fun. Anyway, getting back into the market, we're going to look at the sectors here right now and see what's going on across the board. Right now, our defensive sectors mostly red to flat. Utilities pretty flat in the pre-market here. Energy down quite substantially, all things considered, at 0.67. And consumer staples right now pretty flat, a little bit down into the pre-market here. Tech right now is pretty flat, looking like we're trying to get a little bit bouncier to push it green into the open. Real estate flat, materials flat, industrials flat, healthcare a tiny bit red, but bouncing back up here. Financials a tiny bit red, but same kind of theory here, moving back to the upside. Discretionary, pretty flat. And comm services flat. So across the board, we're looking pretty flat in general. Obviously, this is supported by looking at the overall market right now, and that's also flat. But it wouldn't make a lot of sense for much to happen yet, mainly due to the fact that we have jolts in consumer confidence at 10. So expect a kind of a bumpy open. What I'm expecting is not really too much of a move anywhere if you're just joining us, because I see that a few more people are filing in right now. Looking for us to stay right around the 66305, and maybe if you're a bull, maybe like 30 cents or so higher, 40 cents or so higher. If you want to be more conservative, use this after hours high yesterday. 66366 as like a range that will hover around, more than likely stay north of 66178 until jolts in consumer confidence. I think the most likely scenario, though, is to kind of hug this area around 66305 and maybe a few cents north of that. I'm looking at maybe a tight range here, about a buck, especially if we open like right around here at 6625. You got about $1 range on the open. I also want to keep an eye on IV. I'm anticipating that we're going to see an higher IV open and maybe even a little bit of an IV climb into jolts. So that's something we want to keep an eye on. And don't forget, we also have Trump twice today as well. In fact, Trump, I guess, is speaking now, apparently, to some military leaders, I guess, which was not on my docket, but I guess that's happening. So be mindful of that. Again, anything can happen. Trump is just, and anytime a world leader speaks, it's just one of these random catalysts where the market may react just on the off chance they say something that may not even necessarily be bullish or bearish for the market, but just give an idea of whether things economically seem certain or not, right? And that's something we want to keep in the back of our head. All right, market's about to open. Toby reassuring Eddie in the chat, telling him that the yer is still his, but he's the copycat. Yer. Everyone drop some yers in the chat. If you're going to have a good day today, you're going to make some money, and most importantly, you're not going to lose any money. Let's see some yers in the chat. Some yers. All right, market's about to open here. We got about 20 seconds, and like I foretold through my crystal ball here, we're getting a little bit of a push up here. Right now, it's looking like we're more than likely going to hug around the 66305, but we'll watch it either way and see where the opportunity lies today. I also want to go back and touch on Crocs, on Grab, some of these other names we talked about on the program quite a bit, and kind of highlight some things there as well. I also want to go back and talk about Target. So I got a few companies, especially if I'm anticipating this open to be pretty boring, which we'll see right now. We're going to go through those names early on in the day here to kind of give you guys something to chew on while we're just kind of waiting for the market to probably do much of nothing. All right, as anticipated, the market is open. Toby dropping the yer in the chat. He's the only one who's going to have a good day today. Good for Toby. Right now, farting around the 50 MA. Moved up a little bit. Again, looking at the 663, 30-ish area. Max 663.66. But not much to report there. I do want to check on a stock, KC, real quick. This is a name I'm actually short on right now via puts. Keep an eye on this. Now, this was a name I was long on. There was a really great opportunity here for a flat top breakout over the 17 area here on KC. After that failed, so we had a nice push here, and I was up about 5% on commons. It failed. I got stopped out, and I'm happy I did because more than likely KC's coming down to around this like $15 area. I don't really anticipate to go much lower, so today or tomorrow I'm probably going to close out my short. I have a very small starter position, so I'm not like super long on this, on the 15 puts for October, so, and they're not very liquid, so that's why I took a very small position. But right around here-ish is where I'm going to start to look to close out some of these puts. There's even no one on the chain right now, or this just isn't loading yet, so that's why it's a very illiquid chain, not one you want to mess around in if you don't know what you're doing. There we go. Now we got some yurs flooding in. Hatchet with the yur and Strange Maker yur to the yur. Love to see it, gentlemen. All right, I do want to highlight Target. So, I spoke about Target on this program. Oops, sorry. I had a glitch. There we go. I think I'm still alive. Yep, still alive. Spoke about Target on this program the other day, and I even uploaded a quick video on my YouTube channel. And just as a quick update, we're looking pretty good as long as it stays north of this 8810 area. Now, I highlighted on the options chain what made Target very interesting leading up into OPEX, or I should say October OPEX, was the fact that the OI on the call side of the chain was pretty stacked. You're stacked, at least for this week, all the way to 92, and you compare your OI on the put side, as long as you remain north of this like 87, 88 area, the put side is pretty illiquid in comparison to the call side of the chain. Now, if we go a little bit further and go to October 10th expiration, you see a similar rhetoric here, heavy call buying, or heavy OI, I should say, not necessarily call buying, but heavy OI on the call side versus the light OI on the put side. Go back to, or go forward to, that October OPEX, the 17th, and the rhetoric is still the same, except there is this 90, there's some OI, I should say, at 90 on Target. Now, conversely, there's also this OI on Target here that's almost twice as big at 90 as well. So how this is shaping up right now, as long as Target can sustain around like 88 over 88.10 and slowly build some momentum to the upside here, you will see some level of a gamma ramp here, just speaking from options, how options are set up alone, meaning the market is going to have to delta hedge for these positions. As those puts go out the money and as those calls go in the money, market makers are going to have to purchase the underlying stock to make sure that if they are assigned or if people are executing these calls, that they have the shares to fulfill those executions. So as this moves up, especially as it breaches over like 89, and especially once it's over 90, we should see a level or decent push on Target here to the upside. This is one of my favorite names as a short-term play in the market right now. Now, full transparency, I am long both commons and some like leap-ish options, like 6 months out or so. So I do obviously have a long exposure on this name, but the risk reward here is pretty solid if the bulls can push it up. The last 2 days are looking pretty okay. And again, a little bit of a risky play here, but with managed risk, I do really like the way Target is shaping up, kind of forming a double bottom at the 52-week lows. We've consolidated around this LOI at 87.35. New POC is right here at 88.09. So only a few cents below. And like I said, 88.10 was the level I'm watching. So as long as we're staying above that level and building some more volume over that level in the short term, so we're talking the next few days or so, there could be a nice little push here near term for Target. So you want to keep this on your radar. So quick little update there on Target. Let's pop back to the market because the market's open, so I want to make sure we're not missing around on anything. Okay, a little bit more bearish than I anticipated. This is the 1 minute chart. Had a quick little move up, and like I said, I anticipated us staying around here, but looks like we're seeing a little bit of bearishness. Now, Trump was speaking. I just want to see if maybe there's a catalyst there. Okay, we also have Fed Collins still speaking as well, so be mindful that Trump says Hamas has to agree, and if they don't, I'll be tough on them. I don't really think that's a reason enough for the market to drop. And Collins is mainly speaking about, in general, the September FOMC meeting, so nothing really too much to cause a sharp drop. Now, again, this looks scary because it's on the 1 minute, but all things considered, we're not even down $1 on the day from the high to the low, so this is still like $1 range. I just anticipated it to stay a little bit higher on the chart overall. So I guess we'll keep an eye on this. We'll see. We'll zoom around the market real quick, see if there's any opportunity. Tech's looking pretty weak, and looks like we already have our divergence. You guys hear me talk about this on the program quite a bit on how important keeping an eye on the relationship between the Qs and IWM is/are. And when we see divergence in the market, that's a sign that money could be rotating around. Now, it's not a super clean divergence, but you're seeing some bullishness come into the IWM. You're seeing a little bit of bearishness come into the Qs. It's still early on in the morning, but you want to see if trends like this substantiate or if they all get on the right track. I also want to highlight to you guys that the VIX right now is at right above my LOI here at 1653, currently at 1655. So you want to keep an eye on this as the VIX was kind of consolidating the last few days here and now gapping up, which is interesting considering the market is relatively flat. We really didn't have a move overnight. But volatility is still having a move up. So like I said before the program even started, that I was anticipating volatility to kind of tick up. I actually mentioned that yesterday, that I was anticipating volume to tick up, or volatility to tick up today, or yesterday and today. Now I do want to check out the IV on these SPY contracts and see if that supports the narratives of short-term volatility, and it does. Right now at the money contracts on the SPY is roughly around 17%. Now you also notice up here, we look at this almost every day, our IV, or 52-week rolling IV on our 0-day contracts is roughly around 16%. Now this does incorporate IV on other chains, but I like to be a little bit more strict and only compare it to the 0-day. So we are in higher, or we should say we are currently at a higher volatility point for the market than we are on average. Now in terms of implied volatility, okay, this is very important. I know you guys can't see this because it's a pop-up, but IV percentile yesterday was 33%. Meaning 77% of the time, no, 67% of the time, IV has been higher than it was yesterday. That number dramatically increased to 44%. So IV percentile has now swung upwards of 11% from yesterday to today. That is massive. So that is saying that volatility has now increased so much that it's basically increased the likelihood of the market being more volatile right now than it has been the last rolling 52 weeks. We were in the 44th percentile, meaning only 56% of the time the market was less volatile than it is right now. So IV percentile starting to move up. This means your SPY contracts are going to be more expensive, but this also supports the thesis that there could be a period of volatility coming into the market very soon, which is interesting considering, man, I'm tripping over my words, interesting considering that the market really hasn't done much. Like, yes, I said yesterday we kind of consolidated here. We had a little bit of a push down, but really nothing crazy. So the fact that we're seeing volatility expand and we're seeing the market not really go anywhere is the early warning signs of something not good to come. Now, last week we saw a little bit more volatility, a little bit more gappy, and the price action was a little wider, so that makes a little bit of sense. But how between Friday and today is so far, I guess these candles don't look fantastic, but I really wouldn't warrant that as a period of having volatility to move even wider. Like, that's something I want to be very cautious of. Now, into the end of the quarter, right, we're going to look at what is possible in terms of a bear correction on the market, as I've been warning of, as a realistic possibility. Now, I was incorrect with my original assumption, and you guys saw me change it on the program where I originally said maybe end of September we're getting some sort of correction, and it looks like the market kind of kicked the can down the road. We could see that correction happen near term, meaning this week, depending how the market handles that labor data and depending how the market reacts to the end of quarter today into tomorrow. So that's going to be a very liquid thing. It's something that we have to react in real time and not really try to predict when the market's necessarily going to go down, because all things considered, the market is still maintaining a bull trend. The market is not bearish. But the opportunity for the bears to strike is there. It's just a matter of will they, right? So you don't want to front run that bear position unless, again, as I explained in that hedging segment last week, and I'll upload this for you guys. You don't want to front run that bear position unless it is a very low risk, high reward trade, like a 5-to-1 kind of trade where you can make a lot of money if you're right and you're not really losing much if you're wrong. Kind of like, again, a hedge. Again, while recognizing that bear opportunity, you tighten up those stops, but you don't tighten those stops too tight. We're going to choke yourself out of making more profit, but you tighten them up just enough where if things go south, you're not losing a lot of money either. So it's a very careful time in the market. Toby says Piton is cooking. I still have, I'm probably going to sell them today, honestly. I have my, oh baby, I might sell them right now. I have some $7 swings, which I think I'm in runner size. Thanks for the heads up, Toby. All right, $2. Let me see. How many do I have left? Because I was actually looking at my portfolio yesterday. I'm like, I got a few of these kicking around still. Maybe I'll close some of them out. Because I just have some runners left. I trimmed my last batch. So I opened this position on Peloton. These $7 calls back on 6/17. That expire on October OPEX. I opened them for 87 cents. I went runners at 176. So right now I'm runner size over 100%, 105%. So I'm kind of debating on letting them sit a little bit longer. Maybe I'll trim into the end of the day, especially if we see what I was talking about yesterday. And today in this program, I said you'll see a lot of money rotate into kind of like the memey, squeeze-ish kind of names. Peloton tends to be one of those names as well, as a retail favorite, where we could see a little bit more of an upside here. So keep an eye on that. And full transparency, I'm very light in swing options right now, shorter term swing options right now, because I do believe we are going to see a correction in the market here near term, and the better opportunities to wait and have that cash ready to be deployed. Till then, I'm riding equity with tight stops. That's kind of my strategy right now, and then I can always change things as we go. All right, looking at the market right now, let's take a zoom around because we haven't done that yet. We're already 11 minutes into the open. Microsoft here selling off on the open here, currently sitting around 510 on the day. Let's look at NVIDIA. 182.30, little finicky here. Apple, not much to see, honestly. Things like some of these candles look scary, but it's just because we haven't gone anywhere. Meta selling off here. Meta's in danger zone. Yep. This is bad news bears for Meta. I knew just by looking at the price. Right over, like anything under 750 pushes Meta more bearish here. The bulls have an opportunity to use this as bear bait and maybe catch the lows of this candle here at 721.24. If not, you're going to see this gap fill and then potentially worse on Meta, which is interesting. I will continue to remind you, as I will do consistently on the program, Google is your canary in the coal mine. And right now the canary is looking a little unwell. We did fill this gap, this tiny little gap here from over the weekend from 912 to 915 the other day. And now we're currently just broke the green star on the daily and wicked the 21 EMA. Now it's not bearish yet, but that is a sign that it's cooling off. So depending on how this candle closes today, it could be indicative of a cool off before another leg here, or at least a period of consolidation before going higher, or pushing lower and filling this gap. Which would line up with my thesis of seeing the first 2 weeks of October lean more bearish, getting some sort of correction, right, in the overall market. So getting some weakness to come into Google here. Near term would be preferable for me. But as you can see, the canary has been singing pretty consistently, pretty flawlessly. But even the canary needs to rest its wings every once in a while, and that rest may be coming up. So keep an eye. Don't sleep on Google. Open right now has been and consistently been consolidating around this 814 LOI here. It's a little shaky. I'm theorizing Open's actually going to see an offering here pretty soon. I don't think it did yet, but I'm theorizing we're going to see warrants or some sort of offering here on Open, and this is actually going to get shot down to like $5 pretty quick. 514, this LOI right here. That's my next buying opportunity. I think it's I think a smart CEO for this company would be selling stock right now. Let me say it like that. I do think if it holds this 814, it's got legs to keep pushing here, but because we've been consolidating around this area for a period of time, if I'm a smart CEO, I saw this gap up, I see we're holding some strength here. The stock's still sitting around $8, so it's pretty strong still. This is the time where I say, all right, let's issue some shares because it could go south here. And if it drops, for whatever reason, the market goes bearish or our stock loses value, now I raise less money for the shares I sell. So I think a smart CEO sells some shares here to keep their runway looking pretty good longer term. If that happens, we see a nice bear move to the downside. That is where I'm interested on a new long on Open, as my long already was stopped out, unfortunately. So I have no exposure to Open right now. Tesla right now, still above the 8 EMA on the daily here. Not much to report just yet. Guys, if you're tuning in right now or if you missed out on the beginning of the show, don't forget at 10 o'clock we have JOLTS and consumer confidence. So, don't expect anything crazy until then. You're more than likely going to see a pretty muted open. Amazon under 221, as I told you guys before, is bearish. Be very careful under 221. Now, this is obviously, it's not broken it. Like we're under on the 1 minute here. So I'm saying when it's under 221 in terms of a daily chart, that's where you want to be concerned, especially if we backtest the 8 EMA today, which we did yesterday. Today, if that shows some level of rejection here, you're going to go to this 214. You're definitely going to hit this 210.88. So this is shaping up to be more short than long as it sits right now, believe it or not, even though it's already got some a pretty decent bear downside in the last few days here. SPY back where I thought it would be in the first place, around the 663.05 LOI, and south of that 663.30 with an extension to 663.66, which is probably where we're going to sit here until 10 o'clock. So guys, if you do have any stocks you want to take a peek at, feel free to drop them in the chat and we'll talk about them, because I don't really prophesize that I'll be trading too aggressively on this open. I'll more than likely wait till after jolts. That's just me. You do you. I'm more than likely going to wait it out. So if there is a name you guys want me to take a peek at, a name that you like, or something, whatever it is, you want me to look at stock, feel free to drop it in the chat and I will be more than happy to look it up. In fact, I'll share a new stock with you guys in just a second, after I take a sip from my refreshing polar seltzer. Anyway, so this is a stock I actually entered in long yesterday. It's called Trinet Group, TNET. This is a $3 billion company. It works in human resources solutions. That's what I was trying to say. So it helps people hire people, essentially, and help run human resources systems, right? Boring stock, boring company in general, but a very, very interesting setup on the chart here. So if you look at your daily, you got your MACD slowly trying to round out here as bulls are trying to build momentum on the daily chart. You do have this channel that's formed from basically the end of August until now, and we're at basically the top of the channel with the red SAR here and above mostly all of our EMAs and MAs with the exception of the 200 MA all the way up here. So there is an inkling or a chance here of a reversal if we get a little bit of volume here to break this channel and pop to the upside here to my first price target of 71.35. Looking at the weekly chart, kind of a similar look here. You'll notice, most importantly, actually, I think you can see it better on the monthly. No, you see it better on the weekly. You'll notice how the wicks, or how many wicks we're seeing on this little downtrend, but you also have a red SAR on the weekly as well. So you have another period of potential upside reversal. Remember, because how the SAR indicator works, it's a matter of working on the parabolic nature of stocks. So typically when we break the SAR, you get a swing the other way. When we see it line up both ways, so we have a red SAR here on the daily and a red SAR on the weekly, that tends to support more of a bull thesis, especially if we break to the upside. So from a technical basis here, breaking out of this channel would be bullish. Breaking the SAR on both time frames, which it's very close to, would also be very bullish as well for a reversal here near term. Now, don't get me wrong, you're not out of the woods here, but as I like to pick out some of these stocks, my bottom feeder stocks as I call them, they're stocks with low risk, high reward opportunities, especially if you're trading equity and you want something more longer term that may wet your whistle. This stock in particular, from my entry yesterday, offers a 2-to-1 risk to reward setup if you have a stop at around this LOI here at 67.27. I have the stop set at 65.20 personally. And going to my third price target of 73.91, so it's just a hair above the top of this channel here, that offers you, again, about a 2-to-1 risk to reward on this setup with a 4% downside and a 9% upside. Now, again, that's only concerning this tiny, tiny, tiny time frame. There could be more upside here continuing to the upside, or as it continues to the upside, as this daily reverses, as this weekly has already started to try to reverse. Yes, we're in a channel here, but you saw this previous week here had good amount of price action. And if you are the people who like to draw shapes, I don't like to draw shapes, but you do have a nice weekly bull flag here. Nice push up and kind of slowly cascading down on lower volume than the flagpole, as you would call it. So this is a very indicative, this is indicative if you are people who like shapes, of a potential breakout to the upside here. Now, looking out even on the month, what I like most about this monthly candle, which will close today, are these wicks here. So you see these 3 wicks here on the last 3 monthly candles, where we wicked the lows down here all the way to 63.23. The following month, we went a little bit lower, but closed dramatically higher. And then that next monthly candle, we stuck around this LOI here at 65.27. So that low got to 64.70, so just about there, which respected the low that was set by this monthly candle at 228. With your MACD pretty burnt out here, it's pretty bearish on this monthly chart. But again, if the daily and the weekly support a potential reversal here on TNET, This monthly chart will swing all the way to the upside here. You still have this red monthly star coming down. So if we tap my third price target here, that will put you bullish on all time frames with the exception of being above, I guess, near term, the daily 200 MA. But basically getting up to 73.91, and if you want to be a little bit safer, 77.81, this thing pushes it bullish on the daily, on the weekly, on the monthly. One of my favorite setups right now, just judging on a boring name that has good technical opportunity that volume supports. So if you haven't already, maybe consider checking out TNET. No one in the chat's dropping any names. Come on, guys. I know you're all trading out there. You guys have names you like. Toby dropped Piton, and it was cooking. Was moving here. You guys have to have names that you're going to look at right now. Come on, guys. Damn. I'm trying to help you guys make some money here. Keep a tight eye on target. Big candle here. Watch 89. You want to watch a few cents over 89. And like I said, 90 is the big level. We break over 90 on target. This thing cooks. We're pushing 92, 93 very quickly on target if it pushes over that 90 price target, just because of how many of those contracts have to be delta hedged this week, next week, and most importantly, October OPEX. So very, very, very big opportunity on target here if the bulls can substantiate a move and a push to the upside here near term. Very, very, very big opportunity here. So do not sleep on target. No sleeping. Debating if I want to throw you guys another fish here. I'll wait. I was going to give you guys another name, but you guys don't seem too interested in that right now. So maybe we'll do it later. Maybe we'll show you another name later that I like. Maybe. Let's go back to the market, see if anything has happened. It has not. Wicked, basically the high of the range I was anticipating. Again, I had a little bit of an extension there, but 663.28 on the SPY. Shot back down to around the lows. Again, I'm not anticipating a move until Jolts, which is in 8 minutes. So we're going to stick around and see what happens to the market on that data along with consumer confidence. Toby's the only one who wants free help, and he's going to get it. FSLR. Let's take a peek. I believe that's a solar company, right? Yeah, First Solar. This isn't one I've charted out, and I've one solar company I really like to trade, and that's Run. I haven't traded it for a little while, but this isn't one I've watched recently. Not one I'm very familiar with, just being honest. But this is interesting, just looking at it from an afar point of view. 221.50. So let's see, 221.5. Put a line there so we can see a little clearer. So you kind of. What I like about this is it's not necessarily like a cup and handle, but you're back up to a high. So anytime you see an exhaustive high, so you're seeing, I'm assuming this wasn't earnings actually, because earnings is here. So some sort of news event happened, big push up, gap up even higher, and then we had some profit taking, some retracement, whatever. And now we're grinding back up to that key price target here, which is the high of this candle. Anytime you see that interaction, you're more than likely going to be met with some resistance, which we are for a few days here. But now that we're above it, you want to wait for a period of a few days of consolidation above that price target, or above that area. In this case, it's 221.50 cents. If we have a few days consolidation there, let that AEMA catch up, then you're more than likely going to continue to the upside here. Looking out on the weekly chart, you could get a little bit more of a move here. I'd look for the high of this candle, 233.09 as your first price target. I'm just doing this live, quick and dirty with you guys. 233.09, and then probably the high of this candle before getting too excited, 240.96. And those are just some highs of these localized candles here in this consolidation range, where you're seeing if there is a continuation here, that's where I would look for the next level of a push. Now, with that being said, the daily did cool off, right? It did cool off. Now it's pushing back up. It could be a little exhaustive here. That's why I'm saying I'd wait for a period of consolidation. The weekly, though, has been pushing pretty hard for quite some time. Now, it's not necessarily bearish by any means, but... and you did get this little period of a retest here, but it shot up right away. So I might want to be even a little bit more cautious on this name and wait a little longer. Now, these solar names are very squeezy, or they can be very squeezy. So I feel conflicted looking at the monthly, though. This is this is a very interesting monthly. I'll tell you right now, based on the daily, the weekly, and monthly, I would stay away from it both ways, either bullish or bearish, because this monthly is ultra interesting. So you had a decent sell-off, and then you had a reclaim, essentially 5 months here to the upside. So basically, we're back where we were before the sell-off. You have this red SAR coming down, which is nice, but this volume. So volume came in at the lows here, clearly, right? You see it from 430 or whatever that is, January, February, March, April. April and May's candle here. You obviously see some volume coming in. Obviously, that was around the tariff time as well. See some volume here, good reaction. Before continuing to the upside, now these last 3 monthly candles here, especially this current monthly candle, is on significantly lower volume. Now, what I will say is that volume is kind of like a return to normal, right? So it's not excessively ridiculous, because normal volume, where it does peak and drop a little bit, it's relatively normal. It's just not comparatively impressive to the last few months. So coming up to this range, I think as a longer term investor, so if I was trading stock, I'd feel more comfortable if it back tested basically this cluster of short-term EMAs here, plus this VP shelf right here around 175-ish, before considering a long. Now, with that being said, I also wouldn't consider a short. This is a very... I see a bull and a bear case both ways, and when names are like that, I personally don't take a stab. You got your MACD curling here on the monthly, which is really nice to see, plus this SAR. So if you're a bull, you break that SAR with that MACD flip. If this had more volume, I'd be all in as a bull, but it doesn't. But if this had more volume, then I'd love it, but it doesn't yet. It's got good momentum. It's a real iffy one, Toby. I personally wouldn't take it unless there's a longer period of consolidation up here or a back test. 175 steep too, man. That's all the way down here. I just don't like it both ways. Unless you're intraday trading it or trading it short term, I just don't love it either way. I see a bull opportunity, I see a bear opportunity, and there's a lot of conflicting data points. So when I'm looking at a stock specifically from a technical standpoint, it's not super clean unless you've already have an exposed long and you got in on the dip here and you're riding it up. Then I just move your stop ups happily. But getting in now, I don't think you have much of an edge both ways, bull or bear. I don't think there's an edge up here yet. So that would be my 2 cents on FSLR. JD, Strange Maker says, what's my take on JD? We got 2 minutes. I'm going to pull it up and we'll pop back to JD though, because I want to keep an eye on the market for jolts and see if the market gets jolted. I wish I had a thunderbolt sound. I don't have a thunderbolt sound. I have a nuke alarm, but that's a little annoying. I try not to play the annoying sound effects. So hopefully you guys appreciate that. All right, we're going to watch the SPY here for the next 2 minutes or so. See, really 1 minute. And then we'll pop over to JD for you, Strange, and take a peek. See if there's opportunity there on JD. But guys, if you're enjoying the show so far, do me a quick favor. If you haven't already, interact with the stream, like it wherever you are, share it out, follow me, subscribe, whatever. Do some sort of interaction with the stream. It just helps support me and helps me with the algorithm. That's all I need. I need a little help with the algorithm. So any sort of interaction you could do, I appreciate very much. And thank you for enjoying the show. And if you do enjoy the show and you want to stick around, you want to see some more of it, do me a quick favor and go over to YouTube and hit subscribe if you haven't already. Once we have 500 subscribers, this will be a daily show. So if you enjoy the content, make sure you pop over to YouTube, hit that subscribe button. Thank you very much for your support. All right, we got 25 seconds until we get that jolt data through, and we'll see where things sit at that point in time. And then we'll reassess, essentially. I'll pull it up on my screen here. And again, you have consumer confidence at the same time, too. So we got a lot going on right now in about a few seconds, which since this is on any follow-through on the SPY, again, if you want to be a bull today, we need to see volume push through above 66366. But that's like the extension of the range. I really said 66333 is kind of where we should sit prior to jolts, and we did. And now we're going to see if we get some sort of movement here. Q's looking pretty bearish, all things considered. And that's not a great candle on IWM either. Not looking fantastic. Volatility is moving down as well, which is interesting to see. Yeah, volatility moving down in the market, it moved up prior to the data. So far, respecting my LOI here at 66305, but not much to report. pretty boring. IWM's got the most action off of that. Basically gave back the pump it had before the news. Okay, so we might be seeing the divergence now flip. The coin's getting flipped on the other side here, where the bulls are pushing into tech and out of the IWM. So the narrative could be flipped here on your small caps. Microsoft over that important 512.76 area. I wouldn't get too overzealous until it's over. Basically 513.55. Ooh, Nvidia broke that 183.30. Talked about this yesterday, guys, so I'm watching for a long here on Nvidia. Let's see, in a perfect world, we wick 184.55. We come down, backtest the EMA, and I'm in. Good volume here on Nvidia, too. In a perfect world, we hit this line, we come down, we backtest that light blue line on Nvidia, bounce and go. Because over this 183.30, that is big for Nvidia. Big, 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 big. So tap this. Now I want to retrace. If it doesn't retrace it, like I missed the move, that's fine. I'm not going to complain. But essentially leave a wick up here, come down, give me an opportunity to get in, and then ride the long. But that is a new all-time high, right? Yep, new all-time high just made for Nvidia. Pump, 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 pump. Nvidia carrying the market on its back so far. Apple got a little bit of that. Meta not getting anything of that. Google not getting any of that. Tesla not getting any of that. Amazon in the gutter. So the market, Nvidia's putting the market on its back, and it's going to be trying to carry it up this hill. Big volume here at all-time high on Nvidia. Big, big, big volume. The last 1 minute candle, you had about 3.5 million. Again, for me to get a long opportunity here, I need to leave a wick here. I need to get some level of retracement. Ideally to this high, 183.58. And I'm just mapping this out for you guys because I know there's a delay. So if we tap 183.58, that's where I'm going to look for the long. We'll keep the 185s on watch. All right, we'll keep an eye on the 185s. So wait and see. Again, if the trade's missed, it's missed. It's fine. But I'd rather be late to the party than show up to the wrong house, as I like to say. So we're just going to watch Nvidia here because, as I've mentioned many, many times, how important getting over this 183.30 is on the daily, and how I don't necessarily think we're going to break this right away. But if we get a cool off and then can go long, that will be a prime opportunity to break this and then really push a good leg here on Nvidia. So keep a tight eye on this. Be patient. Just keep an eye on it for now, and then we'll see if there's the opportunity. You don't want to chase this right now, especially with how the market's leaning. Looking across the board, right, guys? Volatility is still elevated. The other Mag 7 names are not participating at all. None. Zero. All red. Except Apple's got a low green. No one else is participating in this rally. Like, literally, Apple got a little bit of a pump. Meta, down. Google, a little bit up, but overall down. Tesla, down. Amazon, down. Microsoft, up, but it needs that follow through this level. 513.55, it's not really getting it right now. So, did I tap it? I was falling asleep at the wheel. Didn't tap it, but came pretty close. That wick came pretty damn close. Again, the level I'm watching here, 183.58. The low of this candle was 183.74. Came pretty damn close. That might have been the opportunity, but this is very volatile. I'm not going to rush in on these, especially because I believe this IV moved up a bit. Yeah, 38% IV on the 185s. I'll wait. It's okay. Low of these contracts after the pump here was 210. So if I can get a price under 210, that's pretty good. So I'm waiting for this back test here, and ideally a price under 210. Okay, here we go. All right, you know what I'm going to do? I'm going to go half size here. I grabbed some at... all right, I'm waiting a little bit longer. I'll wait another minute. But I'm ready to go half size first, and I'll use another half if it cools a bit, because I'm going to be buying a little bit high volatility. We're leaving these wicks here, so buyers are interested. They're buying. All right, I'm going to go half size here. Okay, I'm half size on the 185 calls at 219. So I'm going to stay half size on these. If we back test this general area, I'll deploy my other second half. If not, I'll just stay half and we can rock it. Mainly two reasons why I'm saying half size. The rest of the market's not supporting this move. SPY is not looking good. The Qs are not looking good. IWM's not looking good. The rest of our mega caps are not looking good. So it is a risky stab when you're using like your mega caps as a sentiment driver. But if things turn around, Nvidia is going to lead the pack, especially on this daily break. So if there is a period of cooling here and then we can push, I'm all about. That'd be pretty awesome, actually. Best case scenario is we kind of float around in this general range here from like 183.85 to 184.20-ish for like 5 minutes, and then boom, push to the upside. That would be the preferable scenario. But again, that was the reason why we're going half size and save that other half for if there is a consolidation around this 183.30 to deploy that second size. There's a second half of my size. So real quick, I want to make a delineation there for a lot of traders that some people can't make. When you go into a trade and you go in half size, let's say you're using $1,000 for simple numbers. You're using only 500 of your dollars. You're going to spend another $500 max, right? If you go into a trade and let's say that's how you're supposed to do it, right? But if you go into a trade and you normally spend $1,000 on a trade, and then it goes down and then you spend another $1,000 on your trade, and then it goes down and you spend another $1,000 on your trade, that's not trading. You're just watering your weeds. You're having a bad time. You're making boo-boos. Don't do that. There's a difference between averaging down and like scaling in. Scaling in, you're acknowledging there could be some downside, but the upside in this case, if there's a sharp reversal, I want to be on the train. I want to have my foot in the game here. I want to have some exposure, right? But if there is downside, I could at least restructure the trade a little bit where it still favors me, and I still have the same amount of total money exposed that I wanted exposed. In this case, again, using simple numbers, $1,000. I still have $1,000 totally exposed, and even if I don't have that full exposure and I have a winning trade and it goes half size and it wins, then I still have a win just on smaller size. So it's not a loss either which way. No matter how you cut it, you still win. So it's a matter of managing greed. This is an awesome candle here because we almost back tested it. We wicked it and rocketed back up. That is fantastic. Fan-freaking-tastic. If it blows through this LOI at 184.55 and breaks this high, we have high momentum. High momentum. And you're going to have a banger on your hand. Now, that doesn't mean I want to average up on this trade, but it will mean that I will be less aggressive on where I take profit. So if I'm using my full size, this is just how I trade. You do whatever you want. If I'm trading and I'm half size and I'm trading and I'm full size, if I'm full size, I'm taking a good amount of my profit between 10 and 30%. If I'm trading and I'm half size, I have less of my money at stake, so I can afford, theoretically, more risk, right? So I can take on and wait 30, 40, 50, 60% till I take my first trim because I'm trimming less. Or it really depends on the trade too. There could be a time where this may be a very high risk trade, and I may want to lock in a good amount, 20%, and keep runners on until it goes 200%, right? That's what's cool about having that flexibility when you're in a lighter position. That lighter position allows you to take a little bit more risk where it makes sense, where you can make more money. So something to consider if you are sizing correctly, I guess I should say. Let's look at the market. I hope today isn't this until 3 p.m. I'm going to fall asleep at my computer. How come when I'm live this happens? You guys know this. You guys come here most of the time when I'm live. This is the price action on SPY when I'm live for some reason. It is just like a heart rate monitor of a decently healthy individual. Beep, beep. Like, it sucks. It's boring. No one likes this. And then I gotta work overtime to at least sound excited about watching red and green lines when the red and green lines aren't even going anywhere. All right, new POC here on NVIDIA. We're just going to focus on NVIDIA because it's going to be way more entertaining. Right here around this 185.75 area. So a lot of volume traded there. And you're seeing right now these contracts. Oh, okay. The IV is still about the same. It went down like 0.5. So there is still high IV on these contracts. And looking like it's holding for the most part. It looked like it could have been decaying a little bit, but it's actually holding up pretty good. I was just eyeballing it, looking at the quote price up here. So it's looking pretty okay. Nice wicks here. Got the red SAR cooking, waiting up here on the 1 minute. MACD is red right now, so we had the opportunity to flip that, break this high, break that SAR, and push. These go in the money if that pushes. Healthy person who is asleep. Yeah, essentially. Essentially. Oh, man. All right, those contracts are trading at 235 right now. Offering roughly about a 7% upside from my entry. You know, if you like it, you can take it. If not, you can wait. You know, do whatever you want to do. All I can do on this program is help you make money. You decide when you want to pull the trigger. You're looking like you could have a little bit of an inverse head and shouldery kind of move here. Shoulder. I'm gonna grab a few. I'm gonna start loading some of the 599s for tomorrow. I grabbed a few. Grabbed a few more. And, you know, we'll keep it there. All right. I'm long the 599 calls for tomorrow at a 137 average. What's that? 10-1, right? Man, I messed up. 10-1. There we go. Oh, my NVIDIA call popped and I was asleep at the wheel here trying to type. Got up to 240 on those NVIDIAs. Let me add this Q call up here so you guys can see. All right, we're going to mainly watch NVIDIA, but I've got both calls up here for you guys to take a peek at. I'm going to trim a few NVIDIA off here just because we are at this key LOI. I think I am debating it. I'll take a few off because I'm debating it. You know what I'll do? I'll take a few off. So I trimmed that for 14%. And then I'm going to slap a stop loss on and let the rest go. Because that way I have upward momentum here that this thing can just pop, which I'm theorizing it's going to. Let me log that real quick. Cool, the Qs are also pushing now as well, as prophesized. I'm going to trim a few of the Qs out here. It's for 16%. I love when I type fast, I never spell anything right. I just spelled gain, G-A-I-O-N. Was not good. It's a bad error. All right, so we got two nice trades there. Nothing crazy. If you're in a small account, you can slap a stop on both if you like. I've got a stop just on the spot on the NVIDIA trade right now. Just because it is half size and I can always get back in. So that's fine. And this one's going to be a little bit more volatile than the Qs because the Qs I have exposure to all the tech, which all the tech looks bad, right? The tech looks like crap right now. Let's be honest. Microsoft looks like crap. Meta looks like crap. Google looks like crap. Tesla could reverse here, honestly. Not bad. And Amazon isn't a tech name, but still looks like crap. So these names look like crap. But the Q chart's got a nice little funky inverse head and shoulders on. I'm going to take a stab on that. I'm going to take a stab on all the big names making a violent comeback basically before noon here. Getting over essentially this high. Your neckline realistically is around like 598 even. But if you want some extra confirmation, get over this high. That puts you over everything. 598.24. So got two solid trades there lined up for you guys. And I think NVIDIA is going to, if this can pop and push, right? If it can, that's going to swing the pendulum for all your Mag 7. Will be pretty smooth, I think. And after we're out of these two trades, then I'll flip back over to JD and we'll talk about it. Until then, I'm going to wait it out here a little bit longer. I am liking this NVIDIA trade more and more. I held my breath here just for a second. Depends on this 5-minute candle closes, which it's trying to close right now. It's going to leave a hell of a wick behind. Unless something happens in the next 3 seconds. Let's see. It's okay. We're back to the POC here. Still green on the trade. But I might get stopped here, which is okay. If I was to take a new entry, I'd take it right now. Do with that information what you will. Back test 21 EMA POC here. If there is a time to bounce, it bounces now, and this is the time it breaks and pushes. In the next like 5-10 minutes. Really, this should break the high by 10:30. If it doesn't break the high by 10:30, I might want to... I got a stop on already on half size. I was going to say tighten up a stop, but it should break the high by 10:30, which is 10 minutes from now. Q's a little finicky here. Again, the market, this sucks. I hate... Look at the SPY right now. What a garbage chart. People trading this are like committing seppuku right now. I'm sure some of you watching are futures traders and you love this. I cannot stand this. These are the days I stay far away. I hate when the market does this. I hate it. I just like bigger, like I guess I like I would have this over a trend day. That's me though. I would take this over a trend day. Because as you guys know, I also hate a trend day. I like bigger price action, big ups and downs. I can ride the wave. I love riding the wave both ways. That's my favorite. When I can hit the reversal on both ends of things, that is where I make the most money. Where all the opportunity is, honestly. At least for me. That's the kind of trader I am, though. Just checking on some of my equity names real quick while I've got a moment to breathe here. Make sure I didn't miss anything major. My grinder position looked like it got stopped out, I think. I'll check on that in a little bit. We'll see if there's a re-entry opportunity there. Spoke about it, I think, yesterday on the program. So grinder offers an interesting opportunity. But we'll check the chart out in a little bit. We will see. All right, just kind of waiting here on NVIDIA. Just kind of waiting to see what happens. Let me check on our IV. IV's gone up. IV was at 37.6, now at 37.5. So IV's actually increasing despite its sideways price action from my entry, which is interesting. Now getting a little bit of a push here on the on NVIDIA and on the Qs. Again, watch the high of this candle on the Qs. 598.24. That's going to be a big trigger point. Your neckline arguably is lower here if we're looking at inverse head and shoulder, right at like 598 even. But if you want to be more conservative, look for 598.24, break in a continuation there. More than likely gives you confirmed kind of an inverse head and shoulder kind of look here. SPY near the highs as well. So our market's trying to get a push here. NVIDIA pushed above that LOI and wicked beneath it again. But we're slowly moving up. It's got 7 minutes before I close my trade out. Or the stop gets hit. One or the other. But this has to break before 10:30. You know what I'm going to do, actually? I'm going to put a stop on my Q position as well. Because if this sees downside, the Qs are going to get hammered. So... be safe, not sorry. Mainly due to the fact that all the other tech names do not look too healthy right now either. So, don't want to be too overzealous there. Getting a little volatility here. A quick little down move followed by a little bit of pop up here on the Qs, back testing all those EMAs and whatnot. So we're sitting on the POC on NVIDIA. If it's going to happen, it's got to happen real soon. 6 minutes to go, NVIDIA. Now or never. Oh, my stop might have got tripped on the Qs. Yep, stop hit on the Qs. All right, so I'm out of the Q position, still long in the NVIDIA at 219. So that doesn't mean that Q position is a dead trade, like a bad trade by any means. Where I might look for an opportunity again to re-enter would be if we held around this general area down here on the POC, which we're kind of wicking a little bit, but it is looking a little weak here. And as I said, and I'll continue to say, based on how all the other Mag 7 names are, they're not looking great. Microsoft's really just holding on for dear life to this 51276 key LOI. Apple, not awful. You got a period of indecision here as well. Meta just pushing lower and lower. Google might get a push here. It needs a little volume, but it could get out of here. Tesla's iffy. Amazon looking a little better for reversal as well. So there are signs of a potential reversal on our mega caps. It's just not too believable. I like this volume here on the Qs. Come on, NVIDIA. I think I'm just going to rock the NVIDIA trade because I was debating on getting back in on the Qs, but I think I'm just going to rock this NVIDIA trade because it's iffy, but the risk reward here on NVIDIA is really solid. But if there's downside on NVIDIA, that's going to tank the Qs. So instead of overexposing myself and getting back into Q calls, I'll just wait and ride the NVIDIA trade. And if the NVIDIA trade goes sour, then I'm not going to have, a loss on the Q trade and then, a break even on the rest of my NVIDIA. I'd rather risk the profit on NVIDIA here instead of trying to get more profit by overexposing myself to a very similar trade, being that of a bullish trade on the NASDAQ. So we're going to play it safe by ear here for now, just because, again, keeping it real, if NVIDIA fails, basically the 21 EMA and the POC here, it's going to get yoinked back down at least to the 183.30 area, which is going to nail the Qs to a cross here and push lows. So I don't want to have that exposure. All right, stop got hit on NVIDIA. Da-da-da-da-da-da. Nothing glamorous, guys. Nothing crazy glamorous, but hey, 2 double-digit gains for short little day trades. It's okay. I'll walk with it. Like I believe I said it on the show, but last week I had a very bad week. When I have a bad week or I make a few bad trades, I want to focus on just being right as much as I can, right? I want to make money and move on. Make money, move on, make money, move on. And as long as I can do that, it will at least help replenish my mental capital, right? You don't want to have bad mental capital where you had a bad week and then you just decide to over leverage, got to make all your money back, you go on tilt, whatever. That's bad. Don't do that. I'm just telling you from experience. But for me last week, I was already having like a bad trading week. And what I did, and what works for me, is knowing when I start seeing the first signs of, maybe I'm having a rougher time of it, I pull back size and I pull back my trade amounts. And I did that, and had old me be in the same position many, many moons ago, I probably would have lost a lot of money. But this me, who is matured and learned, knows myself now, and I know when to pull back, and I did that. And even though I had a bad week on paper, I only lost I think 1.3% of my portfolio, where I'm normally making at least 3 to 5% a week. So minor pullback, right? Nothing crazy. It's all about management. You want to manage yourself at the end of the day. All right, so we're not gonna waste our time here on NVIDIA. It could go still, right? But there could be the opportunity to re-enter. If the opportunity comes to re-enter, it's going to be around, again, the high of this candle here, this 183.59. In fact, I'll put an alert here. I'll put an alert a few pennies higher. Up. And if that pops off, then I'll consider getting back in. And if it's on screen, we'll do that. But as I promised, Strangemaker wanted me to take a peek at JD. So we're going to take a peek at JD. All right, so JD is a Chinese company that's e-commerce company. So very similar to like an Alibaba kind of thing. And they also have merged into other segments of the market too, which I'm not too familiar with it, so I'm not going to speak on it like I know. But I know they're in other segments of, I should say, other industries as well. Fresh off the bat, I hate Chinese companies. I will always hate Chinese companies. There are very few Chinese companies I would invest in general. And I would never really overstay my welcome in a Chinese company unless... Actually, no, I really wouldn't overstay my welcome in a Chinese company. Here's why. And I always reference back to the Luckin Coffee fiasco. When... Damn, I think NVIDIA just popped off. Oh, well. It's fine. But when you have extra risk, so you invest in a company, you invest in a Target, you invest in a Kroger, you invest in a Peloton, whatever. You invest in a US-based company, they have to abide by certain rules, right? When you invest in a foreign company, our American rules, right, are not necessarily applied to them. Their government may not necessarily have the same amount of oversight, where some of our rules apply, right? But when they're in ADR, yes, there's oversight by the SEC, but they're not in America, so I doubt the SEC is going to China to investigate JD if there was a major issue, right? They could request forms, whatever, but those forms could be doctored. So when I'm trading, or if I do decide to trade a Chinese company, I have to take into account the extra risk, and this goes really for any ADR, the extra risk that maybe their accounting's bullshit. Maybe they're lying about something. And again, I'll reference the Lunkin Coffee or whatever it was that was up at like $500. And then it turns out like they lied about all their financials or something dramatic like that. And it dropped to, I think, $1 overnight. It was ridiculous. If you don't know what I'm talking about, go Google it. Yeah, NVIDIA popped off. Gosh darn it. You suck. You suck. It's okay. At least the thesis was right? At least I was right. That's what I like. Whenever I miss money like that, it's like, man, at least I was right. At least I knew and my trade plan was good. And it could have went the other way, and at least I didn't lose money, but at least I was right. Cool. All right. If you guys had not as tight of a stop, then God bless. Hope you made some money. Enjoy that. Anyway, back to JD. Now, take all of that, into your equation if you want to trade JD. Now, speaking from a technical basis, just had a short-term reversal here after being in a downtrend, essentially from last like 5 months or so. Just kind of slowly grinding to the downside. Got a little bit of volume popping here, starting to try to get a reversal as we're battling it out over the 200 MA. Let's zoom out here on the weekly, see if we can get a better opinion. If I would want to do a deeper dive to give you a better answer, meaning find out what caused the reversal here. Unless you want to tell me in the chat, Strange, if you're aware. I'd want to know what caused the reversal to take that into account. Because now what I'm looking at here on the weekly is you're hitting some level of resistance around the 50 MA on the weekly and also the 200 MA on the daily. So you have confluence there for some area of resistance. If you're supply and demand trader, supply, right? Some area where there's liquidity or will be liquidity. And even then, you still have to go over the 200 MA on the weekly here, which is only about $4 higher. So I don't love it. It would depend on your time frame. It would depend on whatever news or catalyst here causes volume pop. For me personally. They got a pop for delivering the newest iPhone in record time or something. Well, that sounds like some crap news. That doesn't sound, I don't know if that would make me super excited about investing in JD. All right, I'll say this. It is a $57 billion Chinese company. For the same market cap, I think there are far better opportunities out there if you're shopping in the $57 billion category or large cap category. I think there are better opportunities that offer a better dividend because this company offers like a 3%, 2%, 2.8% dividend. So if you're looking for a dividend payer that also offers like a good technical setup, that's not Chinese, that's a decent large cap company, I think you'll find that, and I think you'll find a better option than investing in JD. Now, I don't know much about the company, so take this with a grain of salt. I haven't done any research. I'm familiar with what JD does and everything, but I haven't kept tabs on them for quite some time. So there could be some material information here I'm just not privy to. But looking at it from a technical basis, on the daily and on the weekly, this would be a bad time to buy. In fact, it would be a better time to sell, unless you wanted to consider a long with very, very tight, like I'm talking tight as in just a few shekels below the AEMA. But even then, your risk reward is not great. I mean, if you're keeping a very tight stop, then obviously your risk reward would be multiples higher. But even then, like I said, the 200 MA is probably going to act on the weekly at some level of resistance, and that's only giving you like $4 upside, which is only going to be roughly, quick math in my head, like 12% from current price. So I think there's better things that you can make 12% on in this market than JD. So that's just my 2 cents on it. I don't hate it. I would like it more if I was long or you are long, around like $33. Then I could be patient on it and it could work out. But I don't love the setup. Also, these Chinese names are super freaking gappy. So like in the overnight session, because obviously they trade more volume in China. On your overnight, I mean, look at all these gaps that you get. Your overnight session can get really wonky with these kinds of names, where you gap up like 8% one day and you're down 10% the next day. So there's also that additional risk there. I just don't like trading Chinese names. I think a lot of people get burnt on them. If anything, if you did want to trade a company like JD, I think the better option, ironically, would be to trade options, because then you're trading more of a short-term time frame. Same with Baba. I occasionally trade options on Baba. I just wouldn't be an investor, and I wouldn't be owning shares of these companies. That's just me. So hopefully that helps you out. Strange says, yeah, not my reason, but I think that's why people noticed them recently. Okay. Yeah, I will be infamously known as the person who really hates Chinese stocks, and I think they offer extra risk that many other companies don't have, and they're not warranted, and the return that you could potentially get for those risks are not worth it. So do with that what you will. Oh, nice. My KC puts are up. Got in at 85 on these. They're about $1 now. And we're at the money, I believe, on my KC puts. Yep, 15. I'll probably close these out at the end of the day. I'm just looking for basically right around here. They might go a little bit lower, maybe down to 14, but I went very light on this put position, to be very honest with you guys. So I'm not looking for like the moon here. I was just looking for a quick little fun trade. 1036. I guess we'll look at wrapping it up, guys. Unfortunately, I mean, we nailed 2 solid trades, right? Nothing too crazy, but we made some money, right? Which is always great to do on the program, make a little bit of money. My thesis, at least, was right on NVIDIA, and I still made money, so win-win. I'll take it. I'm not mad, right? It's a good day. This QQQ trade could still be valid. It's just so choppy that, like, it's iffy. SPY is the same way. And IWM's down. As I said in the beginning of the show, I know I've got a lot more viewers since then, but if you missed the beginning of the show, today is quarter 3. So I'm going to leave you guys with this, a little bit of survival guide for the end of the quarter. Especially with what we're seeing right now in price action. Any news catalyst will bully this price around. The only real news catalyst that we have for the rest of the day, let me just verify, but we've got Trump to make an announcement in about 20 minutes, and then Trump signing some executive orders at 2 o'clock. Right, 2 o'clock? 3 o'clock. Outside of that, very light on any potential catalyst-driven stuff, at least expected news on the day. As I'm saying this, the market's taking a little bit of a dump. Reminder that our IV is high and our VIX is still relatively high. Yes, we've sold off from that open, the 653 or 1653 LOI, but as you're seeing right now in real time, volatility is starting to round out and push to the upside, which makes sense. The market's getting a little steep here, which I warned because of how all of the Mag 7 names are looking, and your Russell's still pretty bearish. It's a realistic possibility, and that's why NVIDIA was like why I didn't want to get back in on the Qs and wanted to stay in NVIDIA, but it is what it is. Towards the end of the day, your survival guide is this. You tighten up your stops, Okay, so if you're long equity, you have a lot of names you like, tighten up those stops because that overnight session into tomorrow could be some level of unpredictable. We could see nice pushes into the end of the day. So if you're long equity, you want to consider tightening up some of those stops. Don't stranglehold them, right? They don't need to be super, super, super tight. Allow them enough room to still work, especially with your managed risk, but maybe consider moving them more in the profit, right? If you've listened to or if you were here last week for our hedging thing, and I'll upload the video if you missed it, our segment on hedging, consider opening up some sort of hedged position. That makes sense, like I talked about in that video. And again, if you missed it, I will upload it to my YouTube channel today. But you want to have some sort of hedge kind of on that makes sense, where it's a 5-to-1, 6-to-1, 7-to-1 bear trade set up for you, where it makes a lot of sense when you're not risking blowing money on a bear trade, because we're not really bearish yet. This looks scary, but we haven't really pushed bearish on the daily, which is what matters, right? So you want to at least be set up for the event if that does happen, right? Lastly, towards the end of the day today, we tend to see more bullishness come into the market. Now, that doesn't mean blindly buy 0 DTE calls at the end of the day. But again, if you were to take a risk, the good time to take a risk would be at the end of the day and typically towards the bull side of things. You can watch market on close orders to gauge volatility, get an idea of that, and kind of obviously watch your technicals, see if there's an opportunity to get long on the market as a whole before the end of the day. Specifically, especially if we see some downside. Outside of that, especially if price action perpetuates something similar to this, as we saw on the Q, we're still seeing on the Qs, and really IWM is actually just making a bear trend on the day, to be fair. You're probably going to want to pull back a little bit. Your volatility is in a funny area here. If it breaks 1653, you could get a markup on your VIX. Marking up on volatility is going to make it much harder for you to trade as a day trader. Some people make a lot of money on high volatility periods, but I'll tell you one thing, most people lose money on high volatility periods. And if you're watching this program, I've got, I don't know how many, 80 something people watching right now. There's a strong statistical probability that you listening to this right now will lose money trading high volatility. You could make it, but for you to trade high volatility, you really need volatility to continue to rise, right? So when does it stop is always the inevitable question. Where does the fear stop, right? Where does the price disagreement as it gets wider and wider, when is the end, right? So that probability as the VIX increases decreases your chance really to make money, at least in my humble opinion. I would, if you were to trade for the rest of the day, stick to individual names. I'd probably stray away from the mega caps unless, nice push on Microsoft there, unless it's a push over a key area. Like I said on Microsoft, this basically right here, this 513.55, and you saw a big push there. It's stayed above this 512.76. So technically speaking, this was a good little push on Microsoft as we did the NVIDIA trade. Technical break, we got in on the back test. Got out too early, unfortunately, got stopped out on this red candle before the pump, which sucks, but it is what it is. But that trade was very technical, right? We followed the levels specifically. If you're not following a trade plan and you're just kind of willy-nilly buying, I would just be very cautious today. Lastly, if you do want to trade something today, I would probably stay towards your more meme or retail favorite names, like your Open, like your Peloton we talked about earlier, any sort of names that retail, Soundhound, that retail has been like talking about quite a lot recently. I think you'll have a more fun opportunity trading those names, a little less stressful, as you could see some flows come into some of these mid-cap names where, again, hedge fund managers may be looking to make a quick buck to roll it back into the mega caps at the end of the day, or the general market, right? So that's kind of what I'd be looking for in terms of trend today. But I definitely wouldn't force it, right? Today's not a day you want to force, especially with where we're sitting on the daily charts for the SPY, the Qs, and IWM, and knowing where VIX is. Now, the only thing that changes my rhetoric here is if VIX sinks below 16 today. If VIX sinks below 16 today, you're more than likely okay with being a little bit more risk on. But until that happens, you may want to consider a more risk off position on the day, on the hold, on the whole, especially if you are a retail trader, which I am, and you are if you're watching this more than likely. But with that being said, that will wrap up the show for today, guys. appreciate you guys tuning in and watching. We'll probably do another show on... It's either going to be tomorrow or Thursday, more than likely. So either tomorrow or Thursday, we'll do another show for you. I like to try to get out 3 a week for you guys. So we'll do that tomorrow. I'll put out an announcement on my X. So if you're not, make sure you're following me there. And also on my YouTube channel, I've been putting up posts. So make sure you check that. If you don't want to follow me on X or whatever, you'll see it on YouTube as well. And yeah, that'll wrap it up. Hatchet said he made about 45% on that NVIDIA trade. Hell yeah, man. Happy you caught that. That's going to do it for me, guys. Hopefully, you guys have a great rest of your day. Please, please, please make smart decisions as you trade for the rest of the day. And remember, some will say you might need an edge to trade. Well, I like to look at things from a different angle, and that's always what you get right here on the Atomcash angle. Have a great rest of your day, guys. And remember, precision beats prediction every damn time.
The time has passed, and that's a wrap.